Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today we're going to talk about a little bit of bullish news from the soybean pit and from the canola market as well. So let's get right into what is happening in markets today. As you can see, a lot of green on the board today. We saw canola up $6.60 to 613.80. Minneapolis wheat was up 2.75 cents to 560 and three quarter. Kansas wheat was up 3.5 cents to 4.99, and Chicago wheat was up over a nickel and a half at 5.14 and three quarters. Soybeans was up another 11 cents ish, 10 and three quarter cents to 10.2375. Corn was up 5.25 as well at 421.75. Soybean oil up a little bit, 50. It's now trading back over 50 cents a pound. Canadian dollar slid another 15 points to 71.61. We're going to talk a little bit about that. That made a new low today. Cattle was down again, 233.48 for live and 352.40 for feeder cattle. It definitely feels like the cattle market is tired. All right, let's get into soybeans, and I'm going to do a little bit of a rant here, so stay tuned here. Futures rallied into Wednesday's close, so into yesterday's close, and they pushed forward again today. This is basically on Trump's tweet or truth or whatever these are called about his meeting with Chinese President Yi in a couple of weeks or in 4 weeks or so. He talked about some money that was being poured into the agriculture sector as well that is being brought in from the tariffs. We'll talk about that in a second. Just from the charting perspective here on beans, just wanted to point out that today's move brought it up to kind of the cluster of moving averages that soybeans sees here. The 20-day moving average is probably the one that I like to look at the most, although it does give a lot of false signals, as you can see here at the beginning of September. But it did come and test that resistance level. We'll see if we can push even higher than that. That would be good. All right, let's get into the rant here. I actually went to the USDA website. I didn't remember that the whole website would be shut down. I was actually looking for some historic data. And what I came upon was really funny. It actually posts the radical left Democrat shutdown. Now, we all know that Trump is a little bit of a child, but this is a little bit, it's even low for him to put this on a government website that is designed to just provide information. So, let's get into a little bit of the tariffs. Here's where the tariffs are coming from. As you can see, about 15% of the tariffs are coming from consumer goods. So lots of damage yet to come in the U.S. economy because of the rising prices. From what I understand, the sellers or the merchants aren't necessarily pricing that in yet, or they're selling through stock that hadn't been affected by the tariffs yet. That's going to come, and that's going to hit the U.S. economy pretty hard. Industrials are going to be the next one. They're the next largest at about 10%. And then we get into capital goods and raw materials and other merchandise and things like that. So, again, if we kind of go back to this, post that he made, we've made so much money on tariffs. We're going to give a small amount of that back to farmers. Now, do I believe that that will make up for the massive losses that have happened in the soybean market? It's not China's fault. And even Trump here is talking about China using it as a negotiation tactic. He uses tariffs as a negotiation tactic for everything. Everything. He even uses tariffs against Canada as a negotiation tactic to stop fentanyl from coming into the US from Canada, which is a minute amount of the problem that the US is facing. But hey, you can throw your own stones, I guess, at other people's glass houses. So anyway, that's the end of my rant. I do believe that all of this is relatively childish on his part, and blaming the Democrats for everything is not correct either. All right, that's the end of my rant. Let's get into canola here. Canola also saw some strength. I think there's a couple things going on here. It saw some strength, of course, on the back of soybeans. That's really positive, particularly if soybeans can carry forward with some of this momentum. I do think that at some point the soybean rally is gonna peter out until that Yi meeting happens, or Xi. I don't know how to pronounce it exactly, but if we do see some sales, and That would be a very positive sign. If the US saw some sales of soybeans in advance of that meeting, just as kind of a goodwill effort, I think that would really rally markets. If a post by President Trump about a meeting with Xi in 4 weeks rallies the market like this, a sale would be absolutely bullish in my mind. And that could help canola out too. As you can see, canola is coming up against some of its own resistance levels. A 20-day moving average it tested today, and it tested the top of that, the top of this kind of trend line here. We're still not near the top of the channel. Canola has been trading inside of that channel, but as you can see, the trading range continues to get narrower even as it moves lower. Just to kind of show you some statistics here from the CGC. As you can see, these are canola weekly deliveries. They tend to peak right about now. So, what we're experiencing right now is largely harvest pressure. Canola deliveries continue to peak. We have seen a relatively, at least in the last 2 weeks. I mean, this goes to September 21st. So this data is accurate to September 21st. After the airing of this video, or after the posting of this video in the evening, we should see the next week of Statistics Canada data. So right now, canola deliveries aren't behind schedule. I know there's been some talk about that harvest has been delayed, and that deliveries are slower, and that the big chunk of deliveries are going to come in. But this data wouldn't necessarily suggest that. I know we've shown this chart a bunch. Just wanted to update on where we are in this seasonal chart here. We do tend to see lows into the middle and end of September here for November canola futures. Then it tends to rally back. We may be delayed in that a little bit. We did, who knows if we've seen the lows in this market. But we did punch a new low yesterday. So we're obviously still near the bottom of this seasonal index here. We are expecting a rally as we move out of the big glut of harvest, and that may be coming within the next few weeks here. So hold on tight, especially if you have some market and you don't need to panic market anything at this point in time. Now, here's the producer deliveries into process facilities. So that would be crush plants. We're actually meeting last year's pace, which is really encouraging. That's ahead of average. Last year was a very high year for canola crush. So we're matching that at this point. And August was a little bit slow, but as we move through September here into the third week of September, we're still very strong. As you can see, there isn't a big push like there is into the elevator or into the export system because the processing, they are required to process it in order to bring in more. It's more of a demand pull kind of situation where there's not a lot of storage. So it's relatively static as far as the deliveries and the crush pace goes overall. So I think that's encouraging as far as producer deliveries as well. The crush data is, I'm expecting. We are expecting the September. We have the August numbers already. We're expecting the September numbers in the third week of October. So we'll see how the year's starting off. Looks like it's good based on this chart here. Another thing that's helping canola out is the Canadian dollar. Now, we saw a new low get posted in the Canadian dollar today, down near 71.5. That is exactly where that 20-day or 200-day moving average is in Canadian dollar. So we may see some support there, but of course, a lot of this Canadian dollar weakness is coming on the hide of the US strength, the US dollar strength. Although some of this is Canadian fundamentals as well. The Canadian dollar still looks bearish here. That does help canola futures out. It helps wheat basis, corn basis, and soybean basis as well. Because the Canadian dollar is traded in, because canola is traded in the Canadian dollar, the fall in the Canadian dollar affects the canola futures, whereas the other commodities are traded in US dollars or denominated in US dollars, so that helps basis levels there. All right, let's get into wheat here. I think wheat's along for the ride. There isn't a whole lot of bullish fundamentals or bullish news coming out for wheat. And as you can see, the gains that we've seen in wheat don't really change the trajectory of wheat at this time, although there is, kind of a base forming as we move through September here. That was Chicago. Here is HRW. It made a new low yesterday and kind of pulled up from those lows today. A little bit of a hammer pattern as we got into the end end of the day yesterday. Don't trust this at all at this point, but I think the rising tide is raising this boat as well. We're seeing the same kind of thing in spring wheat values here as well. Corn, which is interesting, is should have been that USDA report that was last released is was a very bearish report. It had 207 million tons extra stocks than what was expected, which was a huge surprise. The USDA raised production via more acres. And I think StoneX, I saw, raised production on their estimates as well today. Also on a rise in acres, I believe. So the corn market is still fundamentally very bearish, and that's a concern. But as you can see, uh, corn made up all of its losses yesterday, or from 2 days prior, after the USDA report. So I think that's positive. It is testing the 20-day moving average. I did break the 20-day moving average recently, so that could be some pretty strong support. But if we do see some follow through in corn, that would be a good sign. All right, make sure that you're subscribed to this YouTube channel if you want to see more Canadian ag market news or even more rants by yours truly, Brian. And we'll see you again. We'll see you again tomorrow.